housekeeping things. Again, if you're on the call-in number, just go ahead and mute your phone so we don't get any kind of noise, background noise or anything like that. We are recording the webinar, so just to make everybody aware, I'll record the webinar, post it out to our website. The previous one we had back in May, we posted out there, so if anybody missed that, go ahead and. But what we want to cover today is uncertain tax positions, or UTP, what to expect. I know it's probably in the midst of getting everything ready for the 2009 tax year for the filing in September, if your calendar year. But it's probably a good time to start thinking about 2010, because this is happening, and it's going to happen. So we will kind of start off before we get started, and actually let me. Everybody's screen there. Just for the IRS regulations require they inform you to extend this communication. Any statement regarding federal taxes won't be used for the purpose of avoiding penalties. What we want to talk about today is UTP. We want to talk about kind of what came out back in April, the announcement 2010-30, releasing the draft form. If you haven't seen that form yet, send us an email. We'll send you a copy of the form, or you can go out to the IRS website and pull it down with draft instructions. And so here's kind of what came out of it. This is the quick primer, and then we'll get into a couple key pieces we want to get into today. Who must file? Corporation files. Those are the kind of the forms: 1120, 1120F, 1120L, as well as those who have assets exceeding equal to $10 million, and those who have issued an audited financial statement to cover all or portions of their operations, and have one or more tax positions that must be reported on the UTP schedule. So tax positions. And obviously this UTP, I'm assuming most people are familiar with it, have heard about it, relates directly with FIN 48. The IRS wants to get some more knowledge, as they say, to make their exams more efficient. So tax positions are those things that you're recording a reserve on your financial statement, or you have not been recording on a reserve based on expected to litigate or IRS administrative practice. So the tax position is based on the unit account, very similar language from FIN 48, result in adjustment of a line item on the return. And so the line item on the return can be affected by multiple units of account, and then they have to be reported separately on the schedule. So that's kind of the quick primer for UTP. And the next slide is what's on the form. So what do you put on the form? If you haven't seen the form, I suggest you just, after this, maybe pull it up real quick. But if you're familiar, it's probably all familiar. The UTP number, that's just a numbering that, you pick what you want to put down there. IRS section that you're referring to in your position, if it's section 41, which we'll kind of relate to today with the R&D credits, be it if it's things for transfer pricing, foreign tax credits, whatever relates to timing codes, permanent or temporary, if it's a pass-through issue, administrative practice, and then the maximum tax adjustment. This is the amount that tax position is worth. Worth to you, corporation, and also worth to the IRS in looking at those issues. So, and then you have to have a concise description of each of the numbered UTPs. And the concise description, I'll kind of let you guys read that there, but the two things that we want to focus on today, I know I kind of just breezed through those first two things. I was assuming everybody's clear with it, are let's talk about tax position, maybe just kind of link it right back up with FIN 48, and then concise description. How do we deal with this from a research credit standpoint? And I will kind of pause for 1 second, kind of shrink. If anybody has any questions so far, just kind of pausing for 1 second, we'll take one. Just for housekeeping for us, if you logged on to the webinar with just your first name, and you kind of chat back with us, just your full name, just so we can kind of mark off who attended. That just would help us. All right. Well, I'll take the silence with no questions. All right. So I will put us back to full. So UTP, and what I call this is my look around. So if we sit back and think back a few years ago, harken back to the days when the IRS said that, we're not going to request FIN 48 tax accrual work paper information. We're going to kind of let the taxpayer keep that information, and then 3 years, now they want you to report that on this UTP reporting. And I think everybody is probably pretty clearly aware that what goes into your accrual work papers will soon start, that information will be requested. Now, you might not give them all the work papers front to back, but you're going to have to start answering some of those questions, and we'll kind of get into that of why you would. But this slide here, if you think about it, let's just take that we're claiming a credit. I'll kind of put my point. Claiming the R&D credit on a return, right? Then we put a FIN 48 reserve and we do a FIN 48 on it. And what we base our more likely than not is based on authoritative law, right? That's how we come up to if we're more likely than not, and what issues are uncertain. Well, now that we have to report those uncertain issues on this form, and we're based the reporting if we had a reserve. Well, it kind of goes back into the circle, because the reason why we're holding that reserve is because it's based on that authoritative law that it's uncertain. Well, correct me if I'm wrong, but authoritative law also includes cases, code, regulations, and IRS, material as well. So the fact that it's uncertain is because of things, the IRS has done either through their audit guides or things through previous exam history. And now that we have to do that, we have to report that back. So it kind of goes back into a circle sooner or later. So you claim the credit, you hold the reserve, you have to report the reserve, and then, the IRS looks at that reserve, and then that kind of, starts affecting your claim. Kind of think about that the IRS is asking you to report on something that sometimes it actually is from their guidance that they have given. So look around. So the two things, again, that we want to talk about are tax positions and concise descriptions on this UTP form. So let's get back to a little bit about FIN 48, and I'm not trying to, I'm just trying to kind of link it all together. So FIN 48 is what we consider tax positions unit of account, is the manner in which the company prepares and supports its income tax return, as well as we have to consider how we anticipate the IRS what their approach will be during exam. Again, we're kind of getting into that circle. So you define the unit of account as lowest level to ensure that the different benefits with different levels of uncertainty are treated differently. So you could have, for example, in FIN 48, in those paragraphs A5 through A7, is an example, and what they use is an R&D credit analysis where they have 5 projects, and 3 of the projects are more likely than not, and 2 of the projects are not more likely than not. That sounds like less than more likely than not. And so they have that unit of account as the project. So do we report every project, or is it just the credit as the whole? Now, in the financial information, the disclosure, usually it's just a one big paragraph saying, we have $1 million of uncertain tax positions, not really, demonstrating what is in that $1 million. But on the UTP form, you have to kind of provide how you broke out those $1 million. If you broke it out into every project or every position, and we'll kind of show an example here in a second, it's going to depend on how you do it for FIN 48 of how you report it on UTP. Now, one of the things I'll kind of pose the question is, you provide this UTP form to the IRS, and the IRS comes to examine, and then one of the questions, if I was an examiner, I would ask is, well, you've given me this UTP form. Can you give me the documentation that shows me that all these positions are uncertain? Or prove to me that what you're putting on the UTP form is correct or is accurate. So you have to, there's a jumping off point that they're going to start asking for the information that's going to go into your tax accrual work papers. I think that's just going to, it's coming. I think that's going to happen. It's just a matter of time and how they communicate that to the taxpayers. All right, so here's an R&D credit example. This is not from FIN 48. These are our examples. Considering tax position. So if one position is saleable prototypes, if we include saleable prototypes, you can kind of consider like the TG Missouri case as part of considering that case as part of your authoritative law. Say we have 20 projects, and this is for example's sake. 20 projects, only really affects 5. We are more likely than not on all those projects, holding a reserve on some and not all. So the potential UTP action is probably listing that project as a unit of account on the form. So you'd have actually probably 5 if those 5 projects have uncertainty to them. Those 5 projects, listing them separately, and what you would list is for the maximum tax adjustment is how much the saleable prototypes are worth, not necessarily how much the total project is worth. Now, the thing that muddies it up is that you might have, say, 5 positions that affect all the projects, so it's not always, that clear cut. But again, think about how you defend this tax position on each project, cost center, or total credit, and that going into your FIN 48 as well as going into your UTP. Now, the next tax position is supervisory wages, and I'm just kind of pulling some examples out. Now, this affects all supervisory wages across all the total credit. So, again, more likely than not, holding a reserve for it. The UTP action will probably list the total credit as the item on the UTP form, but again, only list the effect that the supervisory wages. So if the supervisory wages are, $500,000 or $1 million of the credit, you'd list $1 million there. You wouldn't list the total credit as the maximum tax adjustment. Now again, hopefully you kind of see that when I list that on the form, and I list supervisory wages, and it's worth $1 million, you just think about that as putting an IRS hat on for a second. Is now I look at this form and I say, okay, well, these supervisory wages are worth $1 million. And if I'm an exam or technical advisor or an engineer or whoever that might be looking at that information, I would say, well, we've got a good fact pattern for this issue, and this issue. Let's go after those, and we know how much they're worth to a maximum extent, and go after them. So really it comes back to is when you start claiming, we get into the credit, start claiming the credit, and you have pieces that you're going to have to FIN 48 for those, you have to really think, how are we going to defend this tax position? Because if you just walk through the thought process that if you were an IRS exam or technical advisor, you would look at the UTP and say, okay, these are the issues for the R&D tax credit. These are the ones we're going to talk about. let's see what position they have, and let's go, find dollars. So that's kind of an example for a tax position unit of account. And the UTP is really just going to base off what you have for FIN 48. But I think you have to have a hard look of things that are in your FIN 48, because that information is now being leaked onto the form, UTP form, and further going to be, kind of questioned. I will stop there for a second, take a break. For those who have bared with us before on these webinars, we won't have any polling questions today, so I'll spare you. If you have questions, you can chat. You can chime in on the comments. So we covered tax position. We covered unit of account. That's really kind of tied to FIN 48. I think that's going to be pretty easy. Well, there's a couple things to talk about in a little bit. But concise description. This is I guess this is going to be the art of the form. This is going to be the art rather than the science. So what is involved in the concise description? You have to include in the statement that it's an involving item of income, gain, loss, deduction, or credit. So if we're talking a research credit, that's pretty easy. Determination of the value of any property or right or computation of basis. Rationale for the position. Why you think the position works. And then, this is, I think, these last two are the art pieces. The reasons for determining the position is uncertain. If you go into the draft instructions and you look at their examples, kind of the way they phrase it is, the last sentence is, the issue is this. So like the one is, the issue is, can we recognize or unrecognize this benefit? That was for their example that they gave. But that reasons for determining the position is uncertain is basically you're kind of tipping the card on that position. So if we go back to, saleable prototypes, you have to, the issue is the saleable prototype is uncertain because kind of supervisory wages. That's going to be the issue, and really what you're kind of giving up front is you're giving your argument before the IRS raises the issue. Where in a typical exam, you would have, agent come in, he'd kind of look at all the myriad of issues, then they might pull an engineer in for the R&D credit, then the engineer kind of goes through the R&D credit. He might pull out an issue or two, but it might not be ones that you have on your FIN 48. It might not be ones that you thought he would find these, but he didn't find them. Now you really you have to get to them, and they're going to see them before you can get to the exam. That's what needs to be in that concise description, and how you word that is going to be critical. So we kind of gave two examples, a concise and not concise description. First one is, and again, I'm pulling just an example. This doesn't necessarily mean that it is uncertain or not. Claiming credit during the tax year and calculating the wages, the corporation included a VP of R&D in its computation. The issue is whether the wages of the VP of R&D qualify as supervisory, direct, or neither. That would be, I guess, an example of concise. Not concise would be the corporation claimed the R&D credit during the year. Based on previous audits, the tax position's claim was sustained at least at more than likely than not threshold. The issue is whether the credit will be sustained at a more likely than not threshold. I don't believe that is concise because that's not really describing a tax position. If you go back to your FIN 48, your tax position is what is the issue? Supervisory wages, saleable prototypes, gross receipts issues, say documentation by project. That actually would be an issue. Maybe it's some type of contract research expense. that might be uncertain. But you can use previous exam history in determining if that position or issue is more likely than not, but the previous exam history is not the issue. It's not going to be considered as an issue. It's only used to determine the more likely than not threshold, in your FIN 40. So that gives you a very simple examples. The other thing is you might have a unit of account. Say if we go back to if we're reporting a project, right? We're reporting a project, and that project has multiple positions kind of coming through, then we'd have to kind of provide that concise description of what the issues, not just the issue, are for that unit of account. So that kind of, and I'm kind of keeping this brief. I'm not keeping this to be a long webinar today, just kind of a little quick. What we want to do now is just give you our thoughts. Some of the things I think we've kind of expressed here, some of the things to think about, if they come true or not. But let's just kind of, our thoughts of what we've heard, what we've seen, things that, might be of interest or to think about for. So what about penalties? The IRS, I was able to hear Bill Wilkins, who's the chief counsel for the IRS, and he actually talked about UTP at a conference. He was a speaker there back in, this is just in June, so a month ago. And so, there's been no word of what penalties would there be, for sake of example, if you don't file the form, is there a penalty there? If you don't provide, a concise enough description, could they generate a penalty from that? Thinking of some things like that. The other thing to think about is would you be able to amend a return and adjust your UTP schedule? Think about it for a second, is that, is if you amended your UTP schedule from, if my 2009, if I had a UTP schedule and I had amended it next year, would the IRS then put that in a tiered program? Would they say, well, anything you put on a UTP amended form, we're going to look at because we would believe, similar to like an R&D credit amended return, we would believe that it needs to be looked at because why would it have to be amended? That could be something else to think about. But what about penalties? I kind of put that out in green because, there's been a lot of new penalties kind of coming in there. I wouldn't be surprised if there's some type of penalty kind of attached to it or that's there. Second, don't be surprised to see requests of tax accrual work papers. I know we have cases out there that are going, back and forth. But again, we're leaking information onto this UTP form. That's coming from tax accrual work papers. We're listing the units of accounts, the positions, rather than the total. And so the IRS is going to say, well, I need to see, why is this uncertain in giving me more than. If not fulfilled through IDRs, they're just going to start, summonses, I think, are going to be more prevalent if they're starting to get to that information. And we've all known that, the Commissioner Schulman, the way he's characterized it is a way to more efficiently use their resources, predict the new data, help the IRS better select the entities and issue its audits. What I'd like to just visualize with everybody for a second is think of it this way, is, and I'm thinking it from if I was the Commissioner and I had this information at my fingertips, I would say, okay, we're going to do two things. We know what the bigger issues are: R&D credits, foreign tax credits, transfer pricing. Kind of fill in the gaps. Those are probably your bigger ones there. And we have our technical advisors, our national teams. So what we're going to do is, if those issues come up, those national teams are going to provide the guidance to our exam, and we're going to make our exams more quick hits. Forget this whole let's tick and tie every piece of the return out. You know what? If somebody lists this as a UTP issue, that's all we're going to look at. If there's only 3 issues and they're worth $1 million to the maximum tax adjustment, we're going to go after that $1 million. forget about trying to tie out my wage deductions and I get $1,000 here, $1,000 there. Yeah, we'll still get into that once in a while, but we're going to make them more quick hits. So I would you would have more exams that are quicker, and they would be the lead on the exams, or the lead authority is not going to be the agent anymore. It's going to be, the technical advisors, issue management teams, more national level consistency as they kind of, promote it with the issue management teams. So what this is doing is taking some of the power away from your local agent, your local exam team, and putting it into those national groups. And so really those exam teams really become kind of just really the foot soldiers, just following orders, saying, we've got to deny it because that's what we're being told to deny. And then you have to kind of, you have to get some, try to move up the chain is going to be harder and harder and harder. So again, to better select the entities and issues within its audit, I would believe if I was the IRS, and I'm not the IRS, and people probably have different opinions on it, I would do more quick hits. I would say, okay, instead of going to a taxpayer every 2-3 years, you might be able to get to everybody every year, hit them on all their UTP items and go in, go out, issue our NOPA real quick, we're done, and we're out the door. Because, as everybody knows, those technical advisors, those issue management teams, they have their playbook. So, for sake of example, we have supervisory wages on there. They've got their playbook, turn to page, whatever. Let's pull out our arguments for supervisory wages, give it to the agent. They put it on their more information document, and boom, we're done. Make it real fast and get a lot more bang for the buck. Now, this is the third or fourth point there. The IRS is getting pressure from Congress to close the tax gap with less resources. I know they've hired people, but there's a big, kind of gap from, there's a lot of agents who are going to be retiring soon, and there was one point where the IRS wasn't hiring for a while. So there's less resources per the IRS. And is this a way for the IRS to close the tax gap? Well, yes and no. I mean, the tax gap is really just the number. Now they have what makes up the tax gap, but really closing the tax gap and what makes up the tax gap is not necessarily hand in hand. As long as I close up that number, I'll be good. Now where I close it up from doesn't really matter to Congress. They just want to see that number closed. And then, getting back to the IRS has more preference to deny those items because they are uncertain. Gets back to that circular argument. For those who have been through exams, those who have been through maybe issue management exams, Tier 1 exams, you're probably familiar with statements that would kind of sound like this. You might hear that, well, the reason why we're denying this issue on the research credit is because the issue is uncertain. And that's going to be kind of their denial. And you kind of sit there and go, well, how can they, there's really no explanation why. Well, if you're familiar with those types of exams, that's kind of some of their arguments is it's disqualified because it's uncertain. And again, it gets back to they're uncertain because the authoritative law is uncertain. Well, that includes IRS interpretations and their documentation. So you're going to have a hard time. There's going to be some arguments going on because, the IRS is saying, well, if it's showing up on this form, that means there's an issue about it. That means we're probably going to deny most of those that are out there because they're uncertain. And so you have to kind of be prepared to work around, some of those issues and some of the things that are there. So this is a good synopsis of today in environment that's out there and the IRS. And I'll kind of read it. I think it's just a good thing to read. And so taxpayers today often experience the inclusion of disclosed information or the presence of a tiered issue as a barrier to the prompt resolution of their audit. In the experience of many large taxpayers, resolution can become unnecessarily complicated with the injection of invisible IRS authors of generic IDRs or issue management technical advisors guiding the audit teams in the background. There is a strong sense that the new disclosures, calculated in terms of their maximum tax adjustment potential, will invariably cause teams to be decision averse because of the distorted reality that will be reflected in many such calculated UTPs. I think that kind of, when I found this, I provide the reference there. It's a very good synopsis of how exams and audits are going to go in the future, and actually are some of them are going right now. It's very, nobody's making the decision, and when a decision gets made, it gets criticized or gets critiqued or gets analyzed by everybody else within the IRS. So everybody is decision adverse, as would be. So be prepared for kind of generic blank denial. Be prepared for maybe having to step up to appeals. I'm not too, I haven't been gotten any background or any information on how the IRS is training up for this and UTP. I know we're still, a good filing season away, but there's something that they can kind of get to do that. So then what to do now? What do we have to do now? This is kind of our last slide and keeping everything. Again, we're talking about R&D credits because that's what we focus on, R&D credits. How will you defend your R&D credit because it's going to be attacked? We know that, the projects versus departments, that's always an issue that's out there. Do you get around that? How do you document it? How do you have it documented now? Are you getting the right documentation up front? Are you kind of leaving yourself open? Do you have something on your FIN 48 that you really don't have, the best documentation for? It's things to think about now because, it is 2010. You will report items that are in 2010 on UTP. And if you're kind of waiting till September 15th, 2011 to figure out what goes on that form, and you realize, oh, I've got something in my FIN 48 that I don't have the best documentation for, I might be kind of scrambling. Our recommendation is don't wait till next year. I know everybody's, hustling with the current filing, period, but when you get that break, don't wait to figure out, if you're going to have your FIN 48 done, or at least for financial purposes, getting that done sooner than later. Get the schedule, get those concise descriptions built. Figure out, okay, maybe we've got to, do we have all the right documentation for everything that are FIN 48? The other thing I guess I will kind of mention, actually last point, IRS will have the roadmap, defenses must be strong, and we can't stress it enough, documentation on how you qualify. You can kind of, how much it's worth, it's kind of always a secondary issue. The IRS just wants to see, they want to knock you out because you don't qualify because of some type of argument. So documentation, that means, breaking that cycle and getting it more upfront is something that, you'll need. That's, I believe, all of our slides. One of the things I just wanted to mention is thinking about also is think about the triangle, the Bermuda Triangle. I don't know if that's what it is. But think about it this way now is you have your financial auditors, you have yourself, the taxpayer corporation, now you have the IRS auditors. Now, if we find out in a year or two that the IRS is starting to pick apart this UTP and they're starting to assess penalties or starting to do things and really attack that UTP, the financial auditors, I would believe, would start making corporate taxpayers to start listing as everything they have to on that UTP form. They're going to kind of start making you break it out. If the IRS says, hey, we've got to break it out, and corporate taxpayers will say, hey, financial auditors, we should have known that. Or service providers like us, things are going to get you know, as they did with, you know, the Sarbanes-Oxley all type of reporting, they started making, you know, reporting more or more things reported in the financials. I would believe this is going to make your FIN 48 a little more scrutinized, a little more robust, per se. But those are, you know, kind of just my thoughts too. So that's really all I wanted to share today about UTP. I'm not going to, you know, get into it more. Any questions? Anything that anybody might have, you know, questions that we can follow up with you with, or really that's what I wanted to share with. Well, if nobody has any questions, there are a couple people we're still waiting to kind of respond back on. Appreciate everybody you know, trying to get some other things done and getting in. Appreciate everybody sitting on board. If you do have questions, you do have, you know, we'll put this out on our website if you want to listen to it again or point some other people to it, or if you want to just you know, talk about it offline, give us a call, shoot us an email. Hopefully it was helpful. You know, we kind of kept it brief, kind of kept it high level. There's obviously a bunch of other things to, you know, think about. We're not just talking about R&D credits. You know, talking about all the other things too. So we appreciate everybody getting on the call, getting on the webinar, and we'll probably do one here in the fall time. Probably wait until later September, early October. We'll kind of pick that topic and send that out to everybody. So we appreciate it, and have a great rest of the summer, and talk to you soon.